Hi, hello everyone, and welcome to the video. In this video, what I'm going to do is summarize what happened, what we discussed on 2nd May in HPA Weekly, and then in the later part of the video, I'm going to go through my weekend scanning, which will also contain the actionable list uh, in case the market has a bounce. Okay, so let's begin. So last week in HPA Weekly, the bias was that a pullback, which had already started, which was the day one of the pullback last Friday, that pullback would possibly be supported by the key EMAs. The market regime was hard to no money. Why not no money? Because earning season, there will be actionable setups here and there on the daily time frame as well. On the intraday time frame as well. So what is the current bias? The current bias we have is that we are going to have a bounce soon from one of the key MAs that will act as support. How soon we don't know. That is very difficult to answer unless and until that happens. Unless and until we have a confirmation of the bounce, it's very difficult. Could be next Monday, could be after a week or so. What's happening in the key indices? Nifty 50 is the one of the strongest index and a group right now, and even in Nifty 50 there are select few candidates which are extra uh, strong. For example, the banks, the bigger banks, and Reliance in the last few days after the result announcement. So that has also propelled Nifty towards. That has propelled Nifty uh, so as that it has not pulled back like the general market. And from the indices, and I'll show you in a bit, you can clearly see that Nifty 50 is the strongest, then the large caps, mid caps, small caps, and the ones which are not strong is the micro cap. So Nifty had a fake out or a squat day on Friday, this Friday, but it's still above all key MAs. And when the general market has been pulling back or going sideways, this is still above all key MAs. It has not even clipped the 10. Okay, whereas the mid small is below the 10 but still above 20 and 50. So it's still a healthy kind of a pullback what we are seeing in the market. Let's talk about breadth. So there are two components in breadth, like I've been telling you. One is the trend. The proxy for trend, short, medium, and long term, is the percentage stock above the key moving average. 1020 being for the short term, 50 for the mid term, and long term would be 200. So let's quickly look at them one by one. So what we see here is in a shorter term. Let's focus on the 10 for now. So if you look at the short-term trend, the short-term trend has cooled down. Okay, so last week we were extremely overbought, and that was also the time to de-risk your trades. So if you see last week around 22 April 22 23, we went to 96.53, which is basically saying that from the universe 96 out of 100 stocks were above the 10-day moving average, which in general tells you that the breadth is very strong but also overbought. And then fast forward a week later, we now are putting numbers around 20. So 20 is the oversold zone. So this is the zone in wherein risk reward, the breadth from the risk reward point of view becomes highly lucrative. Okay, given that in a higher time frame there is strength. Now what does the higher time frame suggest? In the medium time term, trend is pulling back, but it's still in the bullish zone. Why I'm saying it's still in the bullish zone? Because it's still putting a number above 50. Okay, so if this guy stabilizes and the short term trend tries to move up, curl back up, that is the time to again put a risk, fresh risk. Okay, so this is what I mean by quantifying the relatives, quantifying the situational awareness. It's utmost as a swing trader. It's very important to time your entries when the risk reward is favorable, versus keep the gains when the risk reward is not favorable, which is around here. So again, this is not all the time doesn't work this straightforward, but more or less it works. What's happening in the long term? Long term, we just went back up from the highly oversold zone, and now we are back. So what I expect is, if the market conditions are healthy, we will have a higher low here and then start trending up. Okay. So from a positional point of view, positional players still don't have to do anything with any FOMO, because we are not there yet, frankly. Okay. Now let's go back to the presentation. So like I said, there are two things to talk when we talk about breadth. One is the trend, which we discuss. What about the other thing, which is basically the momentum, and it's more important one, especially for swing traders, because okay, we trend is not so important, but how strong the trend is more important. So for that, we look at two things: M swings, which basically gives you the basal momentum. Basal momentum M swing, we are forming lower highs after we peaked here, which is last week. Okay, so although we are forming lower highs, we are going sideways. There is still a lot of basal momentum. Okay, so if you compare the basal momentum from late January, or rather the start of the January till mid March, there was absolutely no momentum, right? We were putting numbers below 50, whereas now you compare March, April, late March, then April, we are having stocks which are now in a positive M swing territory, which basically tells you the basic basal momentum is there. But Landry, which is the stronger momentum, is still flat. Okay, and after we peaked last week, we are having a very mild pullback on the Landry, which basically means that whatever strength we gained around here, which is that's still there, and it's a matter of I mean, if the bounce is gonna come, the Landry will only get stronger from here. And again, from a higher time frame point of view, I have been um, highlighting this trend line we have on Landry, which is basically a downtrending line since joining the September highs, December highs, and March high. Whenever this guy breaks out, that is also the time when the the momentum of the entire market is going to start rising, and that is when from a positional point of view also it will be favorable for us. Okay, I'll look at a little longer term bias and this is also again for positional people, or buy in for a longer period of time. The Landry weekly, which gives you the long term bias, again, this is also still not bullish, right? And this is also why I say that there is no reason for FOMO. People who are not swing traders, people who like to hold their holdings for a couple of months. So we are still making lower lows, lower highs in on weekly, and only when we make at least a higher low or a higher high, we are we will need to start thinking about putting more risk here. Strong sectors group and indices. QSR did well last week, whereas banks and financials had some sort of a pullback. Defense did well. There was one good day of spurt, um, but the last 2 days has also been mild pullback, although this is very strong. So these are the strongest sectors. In indices, apart from defense, the health and pharma index looks really good in terms of a tradable big base. So I'll quickly show you what I mean by that. So this is a defense base. Now, although this is not an all-time high of defense stocks, and this is an all-time high of the Nifty Defense Index, but this is still a very good and very strong stock. So the more positionally breakout would have been this. This is a cheat breakout. This is an inverse head and shoulder breakout. and then any sort of pullback is what I'm looking at here. The other two indices, like I said, is Nifty Health and its sister index, which is Nifty Pharma, which also looks like it's making a decent breakout pivot, which could be tradable. Okay, so that's all. I don't have any swing and positional positions, anything right now, and so I'm in mostly in cash. So just to summarize, we are still in a hard to know money zone. Indices are above key moving averages but declining, and it's below 10 above 2050. When I say indices, I'm mostly referring to mid small. We are declining, and the decline is day number 5 last Friday. The bias, what I have gathered is that we will probably bounce from one of the key MAs. Positionally, we are still only slightly improving, so there is no reason to FOMO. Now, what I'll do next is very quickly discuss why I am this last thing. Why my bias currently is that we have a bounce. Like, what is it that I'm looking at? What is it that I'm seeing in the breadth that gives me the bias? And basically, this is the situational awareness of the bounce. So what I'm going to discuss is, what is it that you want to see before the bounce? What is it that you want to see when the bounce is happening on the day? Okay, on that day, like for example, let's say Monday, I see X, Y, Z, 1, 2, 3. This bang, bang, bang. These 3 things happening on the day, which would give me a very high probability that this bounce, today is the bounce, and this is the day 1 of the bounce where I can get in and have a very low risk reward. Okay, and also what happens if we follow through? Because see, on the day of the bounce, we don't know if something is going to follow through or not. Only after 2 or 3 days later, we will have the wisdom of the hindsight to say that, hey, market is not favorable because we are not the breakouts are not following through, or the bounce is not following through. Okay, because so anyone who says that, hey, this is not a good market to trade because after 2-3 days there is no follow through, simply it's not possible to know on the day of the bounce. Okay, so these guys are hindsight experts. So that will only come later. So, but we can still discuss that if the follow through comes, what it looks like in terms of breadth. Okay. All right. So I will I will first take you to this slide. Hold on. The momentum trend and momentum dashboard. So on the day of the bounce, there are a couple of things which I would want to look at. One is because on the bounce day, the buying has to be fierce, right? So what will happen with the fierce buying? The net 4% has to move to a positive territory and put a bullish number. When I say bullish number, in general, I believe bullish is more than 10%. So for example, yeah. So anything. So let's go to the intraday plots. So on an intraday, if the net 4% goes above the 0 line, so which is the zero line here, and by the when it is crossing that, then you can have an anticipation that, okay, today is possibly the bounce day. So yesterday, the Friday also, I had an anticipation in the morning, because in the morning we had until 10:30 the breadth was bullish and going up. At that time I thought possibly we will take out the 0. So the anticipation failed at the end of the day. But if it crosses 0, then the bias becomes higher. Okay, so that's number one thing which I want to look at. The other thing, the number two thing, is that the ORB O's, which is open range breakouts on that day, will dominate the ORBDs, which is the open range breakdowns, which basically means that there will be higher number of stocks which open and then trade above their first 3-minute or 5-minute ranges. That basically tells you that on that day the breadth is very strong. So in this case also, for example, until 10 we had 31% of stocks trading above their open range. whereas until that time only 16% were trading below their ORBDs, but then this ORBDs numbers increased, and we knew the day was like slightly bearish or sideways, bearish or sideways, right? So this will how it will look like on a bounce day. This guy will dominate. It will be around 60 to 80% on a very strong day. So those are the two things I look at on an intraday time frame. How that translates to the trend and momentum breadth templates is that, you know, the short-term trend will now start putting higher numbers. So 30th we had a 21.13, 2nd May we had 21.6, only a slide. So, you know, this is like this is noise, could be noise, but what is essentially happening here is we have sort of arrested the downfall. So 90, 50, 45, 38, 21, 21, you know, so the downfall is arrested now. We could go sideways, and if we go sideways, then of course the bounce will not come, and this will not also be translated on the net 4% or the 4.5 hour. But if the bounce comes, then on the trend, short-term trend should rise, and at some point of time it will cross above its 5 DMA. Okay, sometimes that happens one day after. If the bounce is very strong, that can happen on the same day as well. So that is how it translates, and the momentums, the momentum plots, which is the M swing and Landry, they should also start putting higher numbers. Okay, currently they are already, M swing is already in the bullish zone, although we are pulling back. And so if this guy takes out 58, which is 2 days ago, that would essentially tell that, okay, there could be now very high chances that this bounce will materialize to a 3 to 5 days at least, sort of a rally. Okay, so that is basically how it on the bounce day your breadth templates would look like. And the last thing is what after that, you know, what will happen if the follow through will come. So if the follow through will come, this number will start to rise again, 21, 36, 45, 58, whatever, and then if this guy reaches above 80 numbers, we will tend to be slightly okay. Now it's slightly heated. Whatever money I made on this 3 to 5 days, I should potentially try and put stops where I don't lose everything. So that's how it looks like. Okay, I already spent a lot of time here. So now let me pivot and discuss a couple of key setups in case the bounce materializes, so that I am ready to initiate to get back in, basically, right? Okay, so here's my red list, and again, this is the opening of the week, so it will be a fairly large list. So this, all of them are not actionable, but all of them are in some ways actionable setups which I can track throughout the week. Okay, so some of them are extremely actionable, and I'll go through one by one, and then we will also bin them here and there. So the first top bin, top left, is basically flags, tightness, and PBCs, pullbacks which are pulling back at a low risk, essentially flags. Okay, so these would be my most actionable names which could fire immediately. The next box I have is basically a big bases which are sort of ready to break out. Now more importantly here is that they are big bases. Some of them might not be tight, some of them might not be at the low risk areas, but essentially all of them are. So these would be the names which positional people who are more looking for positional kind of things would this one I appreciate. Okay, the last section is also sort of big bases and flags, but they are reversal. They are reversal kind of setups. They are not setups which are at the 52-week highs or all-time high list. Okay, but again, because of the kind of environment we are in, these because the market itself is sort of at a reversal base, you will also find a lot of names will work from here, although many swing traders will not agree with that. But I think that is possible. Now, section 4 is very strong names which are clearly not ready, and but something which I am tracking, or I'm keen to track. Okay, and apart from this, I am extremely keen to play the defense apart. On top of the individual defense names, I am keen to play via more defense. More Sala defense. Yeah. So let's start. So Raj Ratan Global Wires is one of the most actionable names, one of the strongest names. You can see that the M swing is 2.0, and yeah, so Rajatan is like almost the top 10 name in the market, according to sorted by momentum. So and you can see that what is it that you are looking in a setup, as a swing trader. Almost everything is present here. You have a prior uptrend. You have a prior uptrend of almost 80% prior uptrend. Although from a this is in a higher time frame, it's in a downtrend, but as swing traders we don't have to look at that. If in the last 50 days it has a 80% of an uptrend, that is enough for us, right? So 80% uptrend, and then pulling back with decreasing volatility, pulling back with extremely low volumes. You can see that the volumes are decreasing day by day. And then currently it is a inside bar very near to the 10 DMA. So this is an actionable setup for me, and any breakout of the previous day high could be an actionable buy. Very similarly, Vadilal Industries. Now this is slightly better. Some people might like it better because it's a big base breakout. Big base breakout ke baad, this is essentially the second pullback to the key MAs 1021. I mean, one could say this was the second one, but this was highly volatile for me to trade. So I would say this area was the first pullback after the big base breakout. This is the second pullback after the big base breakout, and again volatility decreasing. Not exactly in terms of volatility, but the what's the word I'm looking for? It's a orderly pullback. Yes, that's what I'm looking for. So it's an orderly pullback. There isn't much swings in terms of price in this pullback. Currently, it's at a pullback at a key MA, which is which has shown to support the price previously, and the volumes extremely good, declining. Okay, so this could be another name, actionable name. Gallant Ispat, very similar to Vadilal Industries, second or third pullback after like a bigger base breakout here. In fact, I would say this is the first pullback after the big base breakout, because this is still at the breakout region. So this is in my opinion a good setup. I also have worry for the same reason. This could be a potential big IPO based breakout, but if you just focus on the price action, 67% up move, orderly pullback at the key moving averages with extreme volume decline. Okay, this is another one. Now Zota doesn't look like much, but this is a base. It's like a declining it's like a declining descending channel, and there is a tight area breakout flag, basically, above all key moving average, very close to the key moving averages. So this could have been an entry. This still is only 2% up from the from the 20 SMA, sorry, from the 10 DMA. So this is again another actionable one. Thyrocare is similar to Rajratan and I mean Rajratan, Thyrocare, NACL 2 weeks ago. They're a very similar setup. Although Thyrocare is a good flag, it's still some way above the key moving averages, and so I would really like either a shakeout or a couple of days of tightness for it to be actionable. KCL was extremely actionable 2-3 days ago. I thought this would be a breakout here. It faded, but it's still actionable. It's still above the KMAs. But we have better names above. Diamondi, big base breakout here. It's an even bigger base, slightly choppy, smaller M cap. So those things keep in mind. But a good flag, actionable above all key moving averages. Yeah, but if you rank them, there are better ones, right? Aadhar, housing finance, from a strong sector, the flag is not as much developed as the other ones, but pulling back to the key MAs and having a bounce, now pull back to the key MAs, and then making a very nice base. So so this is also actionable. NH, again, I will not have to explain to you the setup here. The only thing is it is almost the 1-2 pullback. So after a couple of pullbacks, after big base breakouts, they again tend to base slightly longer, wait for the 50 to catch up. So that's the only thing here, but it's actionable again. KIMS is slightly better from NH in terms of RR point of view, because this is a base, Prada trend. This is a base, and this is an inverse head and shoulder continuation base. And after the base breakout, we are now pulling back. So this is an extremely low risk setup. Okay, I will इसको मैं थोड़ा ऊपर कर देते हैं. Then there are other names, obviously banking names. They are the leaders currently in this bear market, and Kotak has been a leader. So there's a gap up, tightness entry, went up, again getting tight after this gap down, and then this was the entry. Currently again getting tighter at the key moving averages. Okay. All right. Swaraj Engines are still in the list, because again this forming a tight area, going sideways is not. I mean, the pullback is sort of halted around this level, and so this could actually break out. There is slightly more volatility in the candles. So maybe not for everyone. All right. Sika interplant system. So this is from defense name, small MCAP, very less float, from aerospace and defense. And if you look at the name, it is basically a big base breakout, which happened here. Had a follow through and now is pulling back to the key moving averages. So this is also something which is very high risk and reward from a point of view of this hasn't even started the up move from the base breakout. This is the first pullback. So generally the first and second pullbacks are good. Style Bazaar had, it was like an EP. Almost, I would say, around almost 60% move. This is the first T, this is the second T, and I mean, in general, the classical entry would be when this is getting taken out, maybe after the third T, but doesn't have to be classical. There is a tight area here inside this red candle. So anytime this range breaks out, that could be an entry. RBA, not a, I mean, I don't, it's not a as great a setup like the others, but if you look at here, anytime it sort of goes sideways in a very tight area for 4 days or 3 days, in this case 2 days, it sort of breaks out. So that just could be, I mean, if you are very interested in the name, this is basically still a tradable setup, is what I mean. KFin Tech was a tight area, did not break out, but now at a 21 EMA. So these are slightly difficult to trade because, I mean, for me personally, because this would essentially be a PBA in anticipating that it will bounce. But you can see that the uptrend base around key EMA, uptrend base around key EMA. So this, if not actionable right now, could be actionable in future. Dixon Tech, again fierce up move and then a very nice 7-day pullback in appearing, which basically means that in the last 3 candles the range itself is smaller than the ATR. So that means it's really tight. Okay, so that means that if you trade this breakout, you will have even if you place an SL at the low of the day, you will have an SL which is lower than the 1 ATR, which is extremely low risk, right? POCL, again, this looks like a reversal base, and which it is a reversal base. This would be the reversal pivot, and but even if you just look at the right side of the base, just the last few days, you can, irrespective of what is happening here, this by itself, stand alone, is a good tradable setup in my opinion. It's a flag 65% increase, and then nice pullback with decreasing volumes, and currently it is trying to break out from this tight area. There is definitely some supply here, so imagine if there is 1 or 2 tight candles, that would be like a second T, and this would be a highly actionable setup here. Yeah, so I will just power through the rest of the names. So these are mostly actionable, and that's why I spent some time engaging with them. Now Manappuram, I want to warn you, and I have done this mistake that I traded Manappuram here, and well, it worked for a little bit, but then it again based. So amazing, and then at some point of time it is possibly going to break out. But as swing traders, if you look at the ATR of the stock is 2.55. So as swing traders, even if it is so beautiful, you might be better off avoiding it, unless and until you are a positional trader who can hold on to things for a couple of months, and then like this kind of move here, it could be slower. Okay, so that's one thing. And I'm sharing this because it's a mistake that I made. I mean, had I traded something else, I would have probably made some more money than trading this name. Although, like, a great setup currently. Okay. Yeah, again, this is getting tight here. So these are the names which has like sort of a bigger basis. Okay, bigger basis. HEG, again, it's a bigger base. I don't like the base structure and all, but a standalone here is also a flag which has a bigger base here, not like the 5, 6, 10 days. It's bigger, larger than 20 days. So some actionable. So the Panisha Biotech broke out here, and I discussed this last week as well. Will probably serve the 1021. Iris is a bigger base. You can look at choppy, but a bigger base. Interarch, bigger base. It's an IPO base. So now what we have is we now have like a flat base here, and currently it's at around key moving average, and then possibly this is the PBC. Okay, so this is the day to initiate a long on a pullback. Why? Because on this day we clipped, or we broke out from the previous day high, which did not happen on any of the days when it was pulling back. So this is an entry tactic. Now this could look like something like there was Hexa, Bharti Hexa, BHART, Bharti Hexa. Yeah. So for example, very similar to this base, right? I mean, not exactly, but very similar. Like there was a big base, flat base, and then tight area developing here, and then eventually it broke out. So interarch could do something like that. Okay, so I would actually bump this up to the actionable list. This is highly actionable. Masdoc. Now, if you see, Masdoc is also a big base breakout, one of the leaders in the defense industry, and currently refusing to give back any gains which it made. Yeah, so some people would argue that, hey, but this is very high volumes. So it just basically means that there's a lot of supply absorption happening here. Okay, with very high volumes, if it is given up a lot of gains, that would mean that okay, there's more selling. But in here, this basically change of hands. And if there is actually some pullback, and then again tight area, really actionable setup. Okay, I'm actually spending more time, so I'll not so much this one. I'll take it out. Great setup in making. Same like Manapi, but it is slightly higher ATR. India Glycol, very similar to EDs, very similar to some other names, maybe DVs. So now pulling back just above the big base breakout pivot. So APL Apollo, again, slightly small ATR, less ATR, but is a very big base breakout on the cards. Okay. Star, again, very similar. Not a horizontal line here. Everything is not horizontal, mind you. There's a supply which is slightly slanting. Kiri Industries, big base breakout, now has found support on the 50 day, and again, sometimes this big base breakouts, slightly volatile ones, are better to be entered at PBCs rather than breakouts. Okay, something you need to inculcate when you are trading in adverse conditions. I mean, yes, you can wait for the bull run to arrive, but if you are from the school of thought that okay, we can still trade during suboptimal conditions, then these are the changes you need to make. Lois Metal, again, very similar. This is the pivot, did not break out, pulling back to 50, and there's a tight area here. Divis Lab, tight area. Laurus, the base has increased volatility, but Laurus is Laurus. It basically, if you look at it, it's at the mouth of the big base. So also the earnings were decent. There was 30% surprise, 6% surprise in revenue, and I think there is a pent up demand in here. Hall, now this is in the list because it's a big base. If you believe in symmetry of the base, there is a pullback like this coming, but if not, there is still an actionable pivot, which is basically a 2-day tandem inside bars. Any breakout of the TIBs is this is actually a more better this one. Kitex looks, there's a big base, the handle formation here, and also some macro developments going on. SBFC, again, I don't like the base. I really don't like the base. I actually traded this, was in a huge profit, and then gave back everything. So there's also the volatility has been increasing, but if there is a decent tight area here, if you just look at the last few days price action, this is a decent actionable flag. Okay. Then we come to Force Motors. Again, this is a decent pivot, very strong pivot, 1 touch, 2 touch, 3 touch, and then as the touches go on increasing, that breakout is essentially has more legs. Power Force Motors, we discussed this last week also. We had a shakeout here, and then 2 days of pullback. and then some demand here from the 21, and then we had a huge blast. So not all squats, okay, not all squats. So supply around the breakout region is as um, uh, is as normal as, you know, finding fish in water bodies. So yes, if you would have traded on that day, you would have taken a stop loss. But the thing is to still keep these names in your watch list. GRSE, not as strong as Masdog, but this while Masdog broke out from the ONP, this broke out uh, from the cheat pivot. Okay, broke out, and then very similar to Masdog, not giving up gains. Now there is getting tighter. So this is another actionable name. Nava, yeah, you can see the base here. I'm anticipating that there could be like a shoulder, head, and the right shoulder coming up. Privy is at all-time highs now. Yeah, this looks strong. Now I have a habit of looking and getting into things which are extremely tight and which has, like, you know, very nice, simpler, less volatile action. Having said that, if you look at the kind of volumes it is putting, this could just go. Does without being very volatile also, this could just go. So that's why I have it in the DCB Bank. Had good earnings, and then it basically jumped up, gapped up, and then now is holding the gap and getting tighter. Okay, so there is another actionable entry coming in. It's also like a DTL based breakout here, and after that this gap is really strong on earnings. So all right, now PGEL is a big base, and there was a shakeout. Now some shakeouts materialize after a couple of days. Some shakeout just fail. Not shakeout, sorry, squats. So this is the latter category, but it's still not very far from the key EMAs. Now, if the whole sector moves, like Dixon is setting up, Avalon is setting up, some others are setting up too. So if the whole sector moves, this guy will also move, and then you will have an even better low risk area sometimes. So this is that's why it's in here. Yeah, so other names are also Kanye's. Kanye is also very similar sector. Now I could bump this up to here, just TI. Now TI is also a very actionable base, but a reversal sort of a base. It's near to its 52-week low rather than 52-week high, and that's why these are the reversal base. I will not go through all of that. I will just leave you the link in the HPA description, and yeah. So I hope you like the video. I do this every week on my YouTube channel. If you think this is something which you like, subscribe to the channel so that you don't miss the video, and yeah, like it and share it. I'll see you in the next one. Bye bye.